Another beautiful day, 72 degrees out here in Palm Desert, and I just drove by this development right here that seems to just get bigger and bigger, and more home developments have begun here in Palm Desert, California. And watching the news today, I think everybody should be a little bit concerned, especially home builders. Dow Jones down 524 points today. NASDAQ was down 286. The real concern here is the 10-year bond yield sitting at 4.32% as I make this video, up 15 basis points today, ladies and gentlemen. And people may go, well, that's no big deal. It is a big deal because if you want to buy a house, if you want to buy a car, if you are financing a credit card balance, this will concern you because rates are not coming down. They're going to continue going up. The 30-year right now, 30-year mortgage, fixed rate, checked bank rate about a half an hour ago, 7.14%. So the homes around me right now average about $665,000 for about a 1,900 square foot house, okay? So these houses right here, some of them may be over 700,000, some of them may be in the high 500s, but think about people buying these homes, financing these homes at 7+%. Now, they're not a bad looking house. I don't know about the quality of these homes, but they are just putting up homes all over the desert, ladies and gentlemen, all over the desert. So these are going up right now. There you go. And more homes will be going up over there. All these homes that are already built. You got models over there, homes that are sold, these under construction. And the homes right here, these are done. And I don't know if they've been sold, if they're for sale. This one's still under construction, 35707, looks finished. But nobody is living in these homes at the moment. So I would imagine that they are for sale. But think about nearly $700,000 for a home at 7.14%. Who's going to do this? Who can do this right now? There are people that can do it. I get it. But there are so many homes going up. There is so much inventory coming on the market out here in the desert. And our real estate sales are down around 35%. So people are not buying. The market is completely overpriced, and it's beginning to get very saturated with all these new homes coming on the market. And I'll just show you a few of these over here. Not a bad looking house, but look how close they are. I mean, you're literally 10 feet from your neighbor and you're paying, you know, $700,000 for a house. Yeah, here's one right here. So these homes, again, are about 2,000 square feet. 665,000 is the average price. Now, another thing that is concerning is the inflation numbers came out today. CPI was worse than expected. CPI increased 0.3% in January. That's 3.1% on a 12-month basis, down from the 3.4% in December. So at the end of the day, inflation is continuing to go up, not down. It is continuing to go up. And so it's just going up a little bit slower. But when you look at what you're paying at the grocery store, when you go to a retailer's, I don't see where prices are coming down. I see prices doing nothing but going up. And when you look at the prices of these homes around me, it's incredible what they're charging for these homes right now. But markets are beginning to get concerned, as we saw the markets today take a bit of a hit. And what's really shocking is, and comment down below, Dow Jones was down 750 points at one point in the day, closed at the end of the day down 524. Should have been down 1,000 points. How in the world did the Dow Jones, or did these markets not close worse than what they did today? So we went from 750 points down and it only closed down 524 points today on the news of this inflation report. It's not going to get any better, ladies and gentlemen. It's going to continue to get much worse. And while it gets worse, we're seeing more layoffs. Hasbro reports 20% revenue drop, issues downbeat for 2024 outlook. We have another one here today. Paramount Global lays off about 800 employees a day after announcing record Super Bowl ratings. That's 3% of their workforce gone in a day, ladies and gentlemen. How in the world can they keep telling us that everything is good and yet people are getting laid off by the thousands every day? And it blows my mind. I just cannot comprehend who's going to continue to pay these type of prices for homes. I mean, think about a 30-year mortgage. How many people are going to be able to pay on these homes a year from now, 2 years from now, 3 years from now? I mean, how many of these people right now in this development have already lost a job? They're already on life support. And how many of these homes right now are vacant? And how are they going to sell these things? At some point, you know, as the builders continue to buy down these mortgages, these mortgage buy downs that they're doing as an incentive and throwing in all these other added incentives, at some point, it's not feasible because it's cutting into profits. And the longer that rates sit above 7%, the more it's going to cut into their profits. How long? They cannot buy down every house for the next year, 2 years, or 3 years and make money. It's just impossible. But I would think that watching what happened today, and it should have been much, much worse, many of these builders are getting very, very concerned with what they're watching take place. And at some point, as much as they manipulate things in these markets, and look, if you think today wasn't manipulated, at one point down 750, and they almost got it back. They got the Dow almost back under 500. That's bad enough, but it could have been 1,000 points. So to think that they didn't get in, use a plunge protection team, manipulate things a little bit, you know, let me know what you think about that, because I think there was definitely something going on behind the scenes. They did not want to see the markets get crushed today, but it's getting harder and harder for the markets to ignore the news that the cavalry is not coming as fast as they thought. There are not going to be 6 or 7 rate cuts. Some realtor told me that, oh my goodness, it's going to get so good once they start cutting all these rates, and you know, once we get 3 rate cuts, it's going to be a seller's market, and prices are going to go up, and we're going to be making all this money. I'll tell you right now, I just drove by the office here by the model homes. There's nobody here. Who's paying $700,000 for one of these things? And if you're smart, you're sitting on the sidelines like I am, waiting this out. And you know, if these people, again, who just think that I need to move tomorrow because, you know, I need to be walking the walk and I need to move tomorrow and get out of here, why would I go against everything that I talk about daily? I tell people I would never buy a house in this market. It's the biggest bubble I've ever seen in my life. So why would I go and buy a house in this market? Yes, California is a cesspool. It is not good. I would like to leave tomorrow, but I am definitely not going to pay the prices that they're asking for a home in this housing market right now. Patience is a virtue, ladies and gentlemen. And again, these people who are so adamant and so concerned about me moving, and I've been talking about moving for 3 years. First off, I've never spoke about moving 3 years ago. Talked about it, said it was an idea. A year ago, I actually took a flight down south and investigated property. And I've come to the point where I have to leave the state, but I am not going to get ripped off buying a house that went up 150% in 2 or 3 years. Just not going to happen. And I would tell that to anybody in my family, a friend. Do not buy in this market. It is completely overvalued. Rates have gone up while prices have gone way up. They should be coming down. And so there's just too much uncertainty, too many unknowns politically, socially, financially right now to be making any big ticket purchases. So again, I would never advise anybody to buy a home right now. And certainly I'm not buying a home in this market either. That would go against everything I'm saying. Patience is a virtue, ladies and gentlemen. Senate passes $95 billion Ukraine-Israel package. This is absolutely shocking that a bankrupt nation like we are is just going to go around and give another $60 billion to Ukraine, $14.1 billion to Israel, $9.2 billion in humanitarian assistance to Palestine, $4.8 billion to support Indo-Pacific region. Who's paying for all this, ladies and gentlemen? Comment down below. Let me know how you feel about this. You know, it's not to me a Israel thing or a Palestinian thing. To me, I hate war. I hate seeing the violence that's taking place on both sides. I wish it would end. I don't want to see Ukraine and Russia killing one another. I don't want to see problems in the Middle East. And I certainly don't want to be financing this. We're literally financing both sides of all this. We're financing everybody. And if we stop giving everybody money, maybe they would stop killing one another. It's just unbelievable. It's absurd, ludicrous what is going on. We are bankrupt, and they're talking about another $95 billion. Where is this money coming from? Who's going to pay for this? Comment down below. I want to know how you feel about this. And again, this is not political. Somebody says, oh, JB, you can be political. You're being political. It's okay. No, I'm not being political. There's a right. There's a wrong. And when we look at what's happening financially, we've got to ask, you know, is this responsible or is this being reckless? Who's paying for this? How are we paying for this? Are we printing more money? How is this going to affect the average American? Is this going to devalue your purchasing power, devalue the dollar? So it's not, to me, political. To me, it's very, very financial, because I don't care if you're right, left, or in the middle. I don't want to see people die. I don't like war. I don't like financing war. And the less that we give these countries money, the less bombs they're dropping on one another and killing one another. So I don't think the answer is just always throwing money at the problem and throwing money at these countries so that they can extend these wars even longer. I mean, we have so much blood on our hands, ladies and gentlemen, at this point. It's disgusting. And God has got to be looking at this. And I think America is going to be judged at one point for all this, because we are financing the death of a lot of people across the globe, and it's really, really sickening. But getting back to this, what do you think about the housing market? What do you think about these homes right here? Would you pay $665,000 for one of these? You are in a wind zone. You are about 2 miles from I-10. It's not a bad area. Nothing really great, but you know, not a bad looking home. Quality wise, I don't really know. It doesn't look, you know, it doesn't look like the best of quality, but 7.14% today if you want to buy one of these homes. Of course, the builder will probably buy it down a bit, but how much longer can these builders continue to buy down these mortgages at over 7% and make a profit? And how concerned are the builders? And how concerned are sellers getting? You know, I look at real estate every day, especially in the southern part of the U.S., looking for a property for myself. And it is really shocking to see how many million-dollar homes have been flooding the market. So I don't know exactly what that means. If you do, comment down below. Why am I seeing so many million-dollar homes in the southern part of the country hitting the market? And I'm seeing so many homes that have been on the market for so long, and so many homes with price reductions. But I'll see a home, you know, reduced $20,000, $50,000, and they're not selling. So what does that mean? It means that homes are very, very overpriced. And as you all know, there are less qualified buyers that can come in and buy a home today. Because without a job, the bottom line is, if you have too much debt, debt to income ratios are out of whack now, and people have too much debt, they don't qualify to buy a home because those monthly payments have gone up with rates along with the prices of these homes. So it's just put it out of reach for so many people. But if you don't have a job, forget about it. You're not going to get a house. And if you have too much debt, you're not going to get a house. And unfortunately, too many people have way too much debt between the cars, the student loan debt, the credit cards, you name it. And we're seeing more and more people whose credit is being destroyed because they're falling behind on car payments, utility payments, rent payments, and they can't do it. And then you have people who absolutely cannot save any money. Savings rates under 4%, you know, working a couple jobs, 18 hours a week, leisure and hospitality jobs after taxes. What's left after you pay, you know, $2,000 a month in rent? You're paying your phone bill, you're paying your car insurance, you're making your car payment, your student loan payment. You're in the red. So who's putting money away? Who can afford to put a down payment down on a house now? And so as I stand here today in this development, Across the street, there's another one getting ready to go up. And across the street from here, there's another one. They're grading it, getting it ready to go right now. And of course, Disneyland is grading and putting in all the sewage and all the infrastructure over there, 800 acres in Rancho Mirage. And it just goes on and on and on. And so, you know, sometimes you ask yourself, you know, is everything really booming? Is things this good that everybody's buying a 700 or an 800 across the street here? They're starting in the low 900s. That's a stripped down model. And they're going up over $1 million for a cookie cutter. Everybody's buying $1 million houses. What's going on? You got to really shake your head how this is taking place and how much longer can it go on? How many of these homes were purchased to be short-term rentals? That's another question. And what happens when people aren't coming here and renting these homes out for the weekend? What happens? So a lot of questions are going to be answered here very, very soon, and we're going to start seeing the answers in 2024, ladies and gentlemen. So I just want to shoot a short video for you today. Beautiful day. We're out here running some errands, and I thought I'd pull over and just and show this to you. But shocking today. Again, I'll reiterate, I'm shocked that the Dow Jones did not go down over 1,000 points today. I think it was on its way, but somebody came in and pulled the rabbit out of the hat today and would not allow the Dow Jones to go down 1,000 points. I think that you could call it the plunge protection team, the Fed. Somebody came in and slowed the bleeding down a little bit. I think it could have been much, much worse. Interesting. We'll see what happens tomorrow. But do the markets even matter? Most Americans are not in the markets. The markets have no bearing or connection or relation to the real economy, but the markets are going to get destroyed at some point too, just like the economy is doing. They've pretty much sacrificed the U.S. economy for the stock market, but the stock market will have its day too. That is going to get a rug pull. The markets are too big. At some point, they will lose control, and when they do, there's going to be a lot of wealthy people. That top 10%, that top 1%, some people are going to feel some serious pain. Now, of course, that 0.00001%, they'll get out way before anything bad happens. But there's going to be some people with money. They're going to feel a lot of pain here when they pull the rug out because the market's too big. At some point, they will lose control. The economy is out of control now. There's no way that I see right now that it's going to be fixed anytime soon. And when people aren't buying things at the stores, what do you think is going to happen to corporate profits? More layoffs, more layoffs, more layoffs, corporate profits dropping, more people losing houses, more people losing cars. This is just going to be an ugly, ugly cycle, ladies and gentlemen, and I cannot emphasize enough that you prepare for it. Today, I'm going to tell you what I'm going to do. People are going to, well, how are you preparing? Well, today, you know what I'm going to do? I'm going to buy some metal. I'm calling SD Bullion after I make this video, and I'm going to order some more metal. Metal got hit today. It's a good day, in my opinion, to buy a little bit more, stack a little bit more. And why am I doing it? Because I think inflation is going to get much, much worse. And I think that there's a good chance that we're going to see inflation actually get really out of control here in America. And so as your dollar buys less, you better start counting your wealth in ounces, like gold, like silver. If you need help with that, go to my link down below, SD Bullion. I don't care where you buy it. It's up to you if you want to buy it or not. You can buy baseball cards. You can buy cartoons. You can buy crypto. You can do whatever your heart desires. But I'm going to buy some metals today. And I think that this is a time in life where you got to go back to simplicity, back to simple things, and own real things. I'm going to leave it there today. God bless every one of you. Have a great day. Stay safe and be preparing. So on my way home, I just had to stop and show you this. Just drove by Carmax, and it is stacked with cars. So I wanted to show this to you. Look at this. Now, I have filmed this Carmax in the past, but I will tell you this, I've never seen this many cars at this Carmax. You cannot get another car on this lot. So I'll walk around here a little bit, show you the inventory. I think we're at a little over $27,000, $28,000 for the average used car price right now. And when you talk about financing a used car, it is not cheap. I've seen it 8, 11, 12%. And if you have really, really bad credit, it's going to be extremely expensive. So when I see this and nobody is on the lot kicking tires, take a look. You see anybody out there? you can see what interest rates are doing right now. And you can also see what overpriced cars and overpriced houses are doing. Everybody says, well, it's the interest rates, it's the interest rates. Yeah, of course it is. But imagine if these cars were a lot less, there would be people buying them with a higher rate. So it's not just primarily high interest rates, it's the high price of the vehicles now, the high price of the homes. Completely stacked with inventory. Car prices are still way too high, and maybe at some point when they come down, people can overlook a higher interest rate versus the higher rate for a car. Love this Lexus right here. This is an F-Type right here. Really nice car. Really, really nice car. Love that F-Type 460. That's a really nice riding car. But what do you think about that? I think it's a combination of things, that rates might be a little too high, but car prices are definitely way too high. If car prices had come down to where they should be, people would be paying these interest rates and not even blink. But when you have prices and rates going up at the same time, like they are and like they have been, it's impossible. There's nobody out here. There's not one person on the lot, ladies and gentlemen. Not one person. Range Rovers, Corvettes, Beamers, Lexus. A lot of nice cars here. Nice black Mustang. But beautiful day, 72 degrees. And nobody is out here kicking tires. Nobody walking the lot. Why? Because the economy sucks. And the economy is in shambles. I've never seen the U.S. economy this bad in my entire life. And anything from housing now down 35%. Sales are down 35% in this area of Coachella Valley. And car sales, from what I can tell, are plummeting. Yet they'll tell us, you know, with some data that, hey, everything's great, inflation's coming down, car sales are going up, home sales are going up. Do you believe any of that? Absolutely not. I mean, they could tell you that inflation's 1.5% today. There'd be some dumb people that would actually believe that, I guess. I guess if you tell people a lie enough times, they'll just begin to believe it. So maybe that's what they'll do at some point. They'll just tell us that they got inflation back down to 2%, while when you go to the grocery store, you're paying 20, 30% more than you were a couple of years ago. When you go to buy a car, $50,000, $49,000 for the average price of a brand new car, $27,000, $28,000 average price, I think, of a used car. I mean, what in the world is going on? A lot of gouging going on, that's for sure. There's definitely a lot of gouging going on. And at some point, guess what's going to happen when these cars cannot move? When they're just sitting here stagnant on a lot for months, guess what's going to happen? The market's going to take over at some point, and they're going to go, hey, we're going to have to start lowering prices and start making space on these lots, or we're going to be in trouble. So unfortunately, they probably pay too much for a lot of this inventory too, and they're going to probably lose a lot because they've overpaid too in the time of FOMO. So they overpaid for these cars. Now they're going to try to get out what they got into them with a profit. It's not going to happen. It's not going to happen. This is an ugly cycle, ladies and gentlemen. It's an ugly, ugly cycle. And what's going to happen when the houses pile up, the cars pile up? Going to be some big loss. Somebody's going to take some big losses, and somebody's going to take advantage and really win because they were patient and they waited, and they didn't jump in with all the FOMO like so many people did. There's going to be a lot of deals out there, a lot of opportunity, without a doubt. But remember this: there's going to be a lot of trouble coming. So, I know a lot of people talk about in these videos that, oh, there's going to be all this opportunity, homes are going to be half off, and cars and boats, and yeah, sure, it's going to happen. I believe it. But you better worry about what's going to happen socially as you watch a social meltdown taking place in America, as you watch this country being more and more divided, as you see crime absolutely exploding. When people get hungry, they're coming into your neighborhoods. They're going to be coming into where you shop. And it's going to affect a lot of people that thought because they live in a gated community that would never affect them. And that is the farthest thing from the truth. You better worry about the crime in this country. You better really worry about the social breaking, the social breakdown in this country, because it's going to affect a lot of people. It's going to affect people who thought they can never be affected because they live in a certain zip code or they live in a gated community. And they just think like, oh, I'm just going to get a house half off, and I'm going to get my car half off, and I'm going to live in fantasy land. Everything's going to be on sale. You better worry about your safety. You better worry about protecting your wealth. You really better worry about protecting your family, because if you cannot protect your wealth, your family, your assets, who cares if you buy something half off? Are you going to be able to keep it? You're going to be able to protect it? You're going to be able to actually drive it? You're going to be able to live in it? If you can't protect it, there'll be somebody out there that will just take it from you. We're getting to a very critical point in this country where it's going to get very, very dangerous. So it's nice to think about all the great opportunities and deals, but you better really think about your security. You better think about the environment you're in and the changes that you're seeing take place right now in the environment, because people are acting like animals. And we've imported so many people from all over the world who could care less about laws in America. And we have plenty of people here right now, born right here in this country, who could care less about the laws in America. We live in a pretty much lawless society, and they don't care. And so when we begin to see more and more of this, who's going to stop it? And we're seeing just massive amounts of groups of people acting out in such a lawless way. No respect for life, the law, for their cities, for you. And great, you got your house half off. What happens when 6 people try to kick the door in and break in and take everything you have and hurt your family? Great, you got the house half off. Can you protect it? Can you protect your family? This is where we're heading into. This is what a third world country looks like, ladies and gentlemen. So you're going to have to worry about you. You're going to have to deal with your own security, be your own security detail. You may have to be your own central bank. There's a lot of things that you better wake up and deal with, because reality is coming to America. And today, in these markets, was just a little shakeup, a little wake-up call of just how quickly things can go from 0 to 60 and do a 180. So I'm going to leave it there today. Please like, share, subscribe. Have a great day, and talk to all of you very, very soon.